Now, the fourth edition of the Graphene Economics report on cross-border tax in Africa explores shifting trends and transfer pricing related to broader taxation themes. These include global tax reform, the impact of new technologies, revenue authorities on alert regarding cross-border taxation, where there's an emphasis on information sharing. Valdis Leikus, who's Executive Director of Graphene Economics, joins us with a greater perspective around transfer pricing trends in Africa. Valdis, thank you so much for your time today.
Hi, Alexander.
Let's really talk. Fantastic. Let's talk about the major cross-border tax shifts and developments that we saw in 2023.
Sure. So when we started our survey 2 years ago, we saw that most respondents, which are mainly representatives from multinational enterprises, identified that top trends would be tax technology, then a global tax reform, as well as increased audit activities. So this year, three years later, when we repeated our survey, what we noticed that there was a significant change in top trends, in that an increased compliance requirements has become a top trend for multinational enterprises. Other top trends that multinational enterprises and respondents have identified as increased sharing of information between revenue authorities, digital services taxes, as well as implementation of remote and flexible work policies. So that's, in a nutshell, what we see in terms of trends.
I must ask you also about the global macroeconomic environment as well as geopolitical shocks and how they may be contributing to the transfer pricing environment.
Sure. So I think most multinationals that operate in a number of countries, they have global integrated supply chains. So any macroeconomic shocks or geopolitical events, like, for example, at the moment, ongoing conflict in the Middle East, which resulted in certain vessels being attacked on Red Sea, might affect the business of them and might delay certain critical components to be delivered on time, which will also then delay the production. This will result also in reduced sales, potentially increased cost. And in those instances, multinationals have to actually look at what their strategy is, especially the cross-border pricing strategy as well. So it will definitely affect cross-border taxes because all of these events, they need to react to it somehow. And one of the things they will do, they will actually think, okay, how we position ourselves. We're still compliant within every country that we operate in, but as well as address these macroeconomic events and shocks.
And bring it back to the African continent, I'm also keen to get insights on that. Of course, we welcome multinationals on the continent, and also it can often look like a foreign direct investment for us. So always keen. But of course, the environment needs to be receptive to these multinationals. And as we see these shifts in cross-border taxes, how does that affect our prospects?
Yeah, sure. So I think from a multinational perspective, I think what becomes very important is that they view tax more as a strategic function and not as a more of a compliance function. They have to realize that tax needs to play and needs to be considered in most business, commercial decisions. Therefore, it is important to include the tax function or finance team when you make certain decisions. From an economy perspective, I think these shifts are, I think, positive because this just highlights from the African revenue authorities and they are ongoing, like they're committed and they made efforts to actually curb tax avoidance, ensure that there should be fair allocation of income between jurisdictions, and ensure that they are aligning their legislation in line with international reporting standards.
Also keen to hear about how sustainability and climate change are climbing up that tax agenda.
Mhm. Yeah, so I think what we've seen, if we see globally, sustainability and climate change is becoming a very important topic for businesses. Just because in many countries there are specific tax incentives if you meet certain climate change goals. So, for example, if you commit to reducing your carbon footprint or source your materials from sustainable sources, you might get tax incentives which would reduce your tax burden. On the other hand, if you don't do that, certain countries actually now impose even penalties to to pay more taxes just because of the fact that you're not addressing this fact. Within Africa region, what we see, this is not yet considered that much, but we do see that in the next coming years, this will also become an important trend for African businesses and economies.
And then before I let you go, Valdis, let's look ahead into 2024, looking at the landscape. Are we expecting similar trends, to dominate 2024? Or are we expecting any new trends to emerge?
So, in a nutshell, I would say similar trends will remain important. I think the shift will be more on the global tax reform, which is about to gain more traction this year, as a lot of countries have actually already implemented the global minimum tax requirements as proposed by our Organization for Economic Cooperation and Development. And the other one that I would also stress is the use of technology, especially AI-based tools that will start to be more used in data collection and analysis, and subsequently tax optimization and risk management.
Well, it's been a pleasure hearing from you today, Valdis. Thank you so much for unpacking this one for us. That was Valdis Leikus. He's Executive Director of Graphene Economics.